Hello students and welcome to the lecture. So students, as we know that we are covering the financial knowledge, right? Okay. And what we are exactly doing, we are basically covering the banking awareness part of it, right? Okay. And in this part, what we had been discussing since last few lectures, basically we had started our discussion over IDBI Bank, right? Okay. We had started our discussion on this. We have covered some facts regarding this, like the overview part, which we had seen. Thereafter, we have seen the establishment also, transformation, okay. Thereafter, the industrial finance banking. And then what we are left with, we are basically left with the government ownership, IDBI bank, and a summary part of it, okay. I hope that all the previous content which we had discussed together, you have revised them well, okay? Because if you are doing this, you will be able to grasp the facts and figures in a proper manner, okay? And if you are not revising the things on a regular basis or the fixed periodically basis, what will happen to you? You will find yourself in a trouble when you have to cover the syllabus or revise the syllabus before examination, okay? So with this note, let's start this session. Okay, so now what we are going to do, we are going to see about the government ownership. Okay, like IDBI. IDBI first of all stands for Industrial Development Bank of India, right? It is the, you can say, full form of the IDBI. Okay, similarly, there was another bank which is SIDBI. All right, so what is the full form of SIDBI? It stands for Small Industrial, Small Industries Development Bank of India, right? That's what we have already discussed in the previous lecture. So why we are doing this? Because it is a little bit revision, you can say. All right. So now let's begin with the government ownership. So first of all, we have to see the government ownership introduction part. Okay. Like what do we mean by the word government ownership? The government of India held a 45% stake in IDBI, making it a government owned bank. Okay. The government ownership stake in IDBI was significant and the bank was in a sense a public sector bank. Now, here what we are talking about, we are talking about the stakes. Okay, like stakes. So what do you mean by the stake? We had already discussed about it in the previous lectures, but here we have also seen it now. So what we will do a little bit revision about it. Okay, so suppose when we talk about an organization like this one, okay, its name was XYZ. Okay, XYZ is the name of that particular organization. Okay, so this organization will hold 100% stakes. Okay, and you can say the stake acquirement decides ownership of that particular organization, like the person who will hold maximum stakes. Okay, maximum stakes, or you can say maximum percentage of stakes in a particular organization, that person will be declared as an owner, right? Okay, so that what we had already discussed in the previous lecture. So here I'm not going to discuss about it more, but what I'm trying to do, I'm just trying to give you an overview so that you can refresh your memory. All right, so similar things happen with the IDBI bank. Okay, this is an IDBI bank. Okay, and as we know that the IDBI, in IDBI, the government of India holds about 45% stakes, right? It means that the government having a significant shares in holding of IDBI Bank. Okay, so it means that the government having the participation in the ownership. That's the same thing we have seen here. The government's ownership stake in IDBI was a significant because it is about the 45% and the more. All right, so that's make the IDBI under the government ownership. It means that government having a significant role in its administration, its management and its operation carry out impeachments. Okay, so let's go ahead. Government ownership. First is rationale for privatization, improving efficiency and the governance. Okay, first point is the improving efficiency and governance. Privatization was seen as a means to enhance the efficiency and governance of IDBI. Okay, private sector banks often have more flexibility and autonomy in decision making and operations. Now, here is something what we have to recall from our past. Like when we started our discussion on it, on the banking awareness, you can say, okay, we had started with the history part. Okay, then we had started over the evolution part, right? These are the two areas where we had started a discussion. Okay, between these areas, there are some important dates. 1949, 1969, 1980, and thereafter comes the 1991. These dates having a significant impact and you can say having a good significance in the banking history of India. Why I'm saying this? If you recall that in 1949, what happened? The Reserve Bank of India was nationalized, right? Because as I had told you in the previous lecture, when the RBI was established, it was established by the British government, but was established as a private body. That was not under the control of the government or the government entities. But in 1949, 2 years after the independence, finally the Reserve Bank of India was converted into the nationalized bank and put under the direct control of the Ministry of Finance, or you can say the Government of India. Okay. In 1969, what happened? The 14 major private banks were nationalized, right? Okay, and in 1980, 6 major private banks were further nationalized. Okay, so remember these details and why it was happening. I had also told you this thing, like when the India became independent, you can say nation or state, we had so many things to do so, right? We have to make sure the equitable distribution of the resources. We have to make sure that adequate financial resources should be available to each and everyone on the you can say eligibility criterion whatsoever. Okay, so that's why what the government thought that the banks which having control of the economy must be put under the direct supervision and control of the government entities so that we could manage them well. Because as I have told you, no one is more greedy than bank, right? No one is more greedy than bank. I had already told you in the previous lectures. So that's why, to ensure the equitable and the fair distribution of the resources, the government of India decided to put these banks under the direct control of the government machinery. Okay, but what happened in 1991? Due to the government failure, okay, due to the corruption, due to the inadequate management, due to the lack of competition in the market, okay, and various other factors, these banks were started collapsing one after one. Okay, and this made the government to think about the pullback of the restrictions which were imposed on the private sector banks or the private players to enter into the banking sector of India. Okay, and finally, in 1991, due to the new economic policy regime, which is also known as LPG. About it, I had already told you in the previous lectures, and we will have a detailed discussion on LPG in the upcoming lecture. Okay, so in the LPG, liberalization, privatization, and globalization, finally, the government had allowed the private players to enter into the market. Okay, so that's why the privatization was started. Okay, so I have built a historical plot for you in which I had told you like why there was a need of the privatization. Okay, how the privatization was started. Okay, and before this, why the private banks were converted into the public entities and then converted into the private entities. So you can say it was started as private banks converted into the public banks, then converted into the private stakes. Okay, so that was the cycle, and why that cycle was generated, I had told you. Okay, so to enhance the efficiency and the governance of IDBI, the IDBI was also privatized by the government. It means that the private sector players and the private players were invited to hold their stakes in the IDBI. Because like if we see the IDBI, okay, so how many percent stakes holding by the government? 45%. Going by this, what we will see that nearly about 55% stakes has been left out. So that was contributed by the private players. Okay. Now, most of you will generate a question in your mind. You will ask me, so basically you have told us that the one who holding the maximum stakes in a particular organization will be declared as an owner of that particular organization. So going by these words, what it is happening here, like the private players having the 55%, but the government having all the 45%. It means that this bank should be private bank. Right? So why do I say that this is a government bank? How I can say that? So basically, for this, we have to crack it down. Okay. Like the 45% stake is holding by the single entity. Okay. But this 55% stakes hold by the various private player, not a single person. Okay. So you can say in such a case, only one person is there. But in that case, there are, you can say many people. Okay. So because of this, no single person holding the 55% stake. Okay. Maybe someone holding 10, someone holding 20, someone holding 21, that's so. All right. So if you compare these things with this one, you will find out that the government is the single entity in the IDBI ownership which holding the maximum stakes. That's why it is called as the government bank. Okay. Now let's move forward. Second is the attracting private investments. How? Let's see. Privatization aimed to attract the private investment and diversify ownership in the bank. As I have told you, when the government was holding the entire stake of the bank, they had been facing the suffrage. Okay. And that's why they have to reduce the burden of the ownership. Okay. And has to invite the other players. So that's why they moved towards the privatization, in which they invited the private players to come and invest in the banking sector. Okay. All right. All right. So this could potentially infuse fresh capital, improve the bank's financial health, and lead to better risk management, because right now, not only a single entity is filling the capital, not only the single entity is following the you can say taking the follow up the financial health, not only the single entity share the risk. Okay, all the things got diversified, all the things distributed well enough. So that's how the system, or you can say the IDBI overall performance was improved. Okay. Thereafter, enhancing competitiveness. Look, competition is very, very necessary, not only from the consumer point of view, that the consumers will be benefited if there will be a competition in the market, not only from this point of view, but why the competition is necessary? Because when the competition is existed in the market players or the market entities, or you can say bank in such a case, they try to improve their services, they try to improve themselves. Okay, and that's how with the continuous improvement, with the continuous improvement, they attract the consumer base. Got it? And this consumer base automatically leads to the income of the bank and eventually the profit of the bank. Okay, so enhancing competitiveness is very, very necessary. By privatizing IDBI, the government sought to make the bank more competitive in the banking sector, because as I have told you, when there is a private players enters in the market, they eventually leads to the increasement in the competition. Okay, this competitiveness could drive innovation, improve services, and benefit the customers. Not only the customers, but also the banks. And how I have told you, like when the customers found themselves very, very, you can say friendly and very, very satisfying with the banking services, they will recommend your bank to the other players also. Okay, so that's how the chain has been built and the systems carry on. Thereafter, reducing government fiscal burden. What does we mean by it? Let's see. The government ownership of IDBI came with fiscal responsibilities. Why? Because like when I've told you that there is a IDBI bank, okay, and due to the failure of the government and all the things, you can say the IDBI was in the loss. Okay, its efficiency was decreasing down. In such a case, the government has to infuse the capital by themselves. It means that will be a physical burden, or you can say the expenditure of the government. Okay, but by inviting the privatization or the private players, what the government did, the government reduced the fiscal burden. Okay, because they have to invest the less amount of capital, because some amount of capital has been contributed by the private players. Okay, so their fiscal responsibility has been degraded off. Privatization aimed to reduce the government financial commitments and liabilities associated with the bank. Okay, now let's move forward. What we have here, professional management. Okay, private ownership often brings professional management practices which can lead to better decision making and performance in the banking sector. Because right now, when there is a competition, okay, you could not rely on the greenhorn management. Okay, and what do you mean by the greenhorn management? Greenhorn management here signifies the unexperienced management. It means that the management which having the less experience in the banking field. So if there is an unexperienced management, they could not sustain the competition for long. Okay, so that's why the private ownership often brings the professional management practices, because they have to survive in the competition, which will lead to better decision making and performance in the banking sector. Okay, thereafter what we have the regulatory approvals. The privatization process of IDBI was subject to the regulatory approvals and compliance with the banking and the financial regulations, because when the private players will enter in the banking sector, okay, what they will try to make their own policies, okay, and implement them. But the approvals are necessary, okay, or you can say the regulatory approvals are necessary, okay, to ensure the compliance with the financial and the banking regulations, okay, so that the harmony of the banking sector will be remain sustained, okay. The government needed to ensure that the privatization process adhere to the establishment, or you can say to establish the legal and the regulatory frameworks, okay. It means that the efficiency will increase, but you can say maintain the governmental norms for banking and financial sector, okay, so that the harmony could be ensured and could be maintained also. Thereafter, what we have the valuation. So in the valuation part, what we have the process of privatization, basically determining the value of the bank based on its assets, liability, financial performance, and market conditions. Because right now, what we have seen that the government was trying to attract the private players. Okay, so why the private players will be attracted to the bank? When they will see their benefit, when they will see a worthy valuation, okay, and for this it is necessary to determine the value of the bank, which will be determined on the basis of the assets, the liabilities, financial performance, and the market condition of the bank, okay. These factors will lead to the determination of the value. Thereafter, the investors interest, attracting the potential investors, including the domestic and the international entities who express interest in acquiring stakes in the IDBI. Once you have decided the value, thereafter you have to attract those investors who could bear up that value and who will be willingly investing in that particular organization. Okay. Thereafter, the bid process, conducting a bidding process where interested investors make financial offers to acquire ownership stakes. About bid process, I have already told you in the previous lecture, so here I'm not going to start it. But remember, the you can say transferring of the stake of IDBI from the government hands to the private players has been done by the bid process. Okay. Thereafter, what we have the approval and the transfer. Okay. After the bidding process, the government reviews, offers, and grants approval to the successful bidders. Ownership stakes are then transferred to the new owners. You can say, suppose this is the particular XYZ, okay, or you can say not XYZ, basically the IDBI, okay, and here are four players, okay. They offer 40 lakhs, he offered 20, he offered 70, he offered 30, okay. So they are offering this value to buy the stakes in the IDBI, okay. Then there is a another entity which we call as a Government of India, okay. The Government of India will review all the bids, okay. All right, and they will choose the best one. So in case this is 70 lakhs is the best one, so that's why the approval will be granted to him. All right, and thereafter the stakes will be transferred to them. So this is how the approval and transfer system works, okay. Thereafter, the government ownership impact on the stakeholders. Privatization of IDBI can have several impacts on the stakeholders like the employees, customers, and shareholders. Obviously, why? Because prior to the privatization, they were dealing and they were doing job and they were investing in that particular organization which was under the full control of the government. But as the privatization began, now they have to deal with both the government and the new private owner. Okay, so that's why it may having a several impact on the stakeholders, may lead to the changes in the management, operation strategies, and the service delivery. Okay, regulatory oversight. Throughout the privatization process, the regulatory authorities like the Reserve Bank of India and the Securities and Exchange Board of India, they both play a vital role in ensuring that the process complies with established banking and the financial regulations. All right. Now, after this, what we have a very short and the quick topic which we called as a transformation into the IDBI bank. Let's finish it. First is rebranding as IDBI. After its transformation from a development financial institution, DFI, about DFI I had already told you in the previous lectures, you can get the reference from there, into a full-fledged commercial bank, the IDBI underwent a rebranding and adopted the name IDBI Bank. Okay, prior to be the IDBI, it was known as a development financial institution. But then after, you can say the transformation, it was renamed or rebranded as the IDBI. Okay. Thereafter, the change in the nomenclature signified its transition from a specialized financial institution to a comprehensive banking entities. Okay, that's what I had already told you in the previous lectures. As IDBI Bank, the institution expanded its operation and offerings beyond its earlier role as a DFI, because I had told you in the previous lectures that the banks having a more role to play off in comparison with the financial institution. Okay, transition to the commercial bank, became a commercial bank, which means that it was now engaged in a broader spectrum of banking services like the retail banking, corporate banking, and the SME. Okay. Thereafter, scheduled bank status. IDBI Bank operated as a scheduled bank. Scheduled banks in India are the financial institutions that are listed in the second schedule of the Reserve Bank of India Act 1934. This designation brings certain privileges and responsibilities. So I hope now you have got an idea about the scheduled banks. Okay. Thereafter, as a scheduled bank, IDBI Bank came under the regulatory purview of the Reserve Bank of India. The RBI is India's central bank and the primary regulatory authority for the banking and the financial sector. Regulatory oversight by the RBI involves monitoring and supervising various aspects of the bank's operation, including its financial stability, compliance with the banking regulation, risk management, and customer protection. Okay. Thereafter, offering banking services to individual customers such as saving accounts, fixed deposit, personal loans, and the credit cards. This is under the retail banking. For corporate banking, catering to the financial needs of the businesses, including working capital financing, terms loan, and the trade finance. SME banking, providing specialized banking services for small and medium-sized enterprises to support their growth and the financial requirements. Okay. Thereafter, the trade finance, facilitating international trade transaction for the importers and the exporters. This is also comes under the banking operations. Then after the treasury operations, managing financial assets, including the foreign exchange operations, investment management, and the risk management. So there is nothing to explain. This is just about, you can see what we are studying. You by reading them, you will get an idea. So as IDBI Bank, the institution extended its reach to a diverse customer base, including retail customers, large corporations, small businesses, and the individuals. This expansion of services contributed to a broader customer outreach. Okay. Thereafter, brand image and the identity. Rebranding from IDBI to IDBI Bank included changes in the brand identity, logos, and marketing strategies to reflect the bank's new status as a commercial banking entity. Okay. Now, only the summary we have. So, let's see it. In summary, we can say the transformation of IDBI into the IDBI Bank marked a significant shift from being a specialized development financial institution to become a comprehensive commercial bank. Okay. As a scheduled bank regulated by the Reserve Bank of India, the IDBI Bank expanded its operation to offer a wide range of banking services, serve diverse customer segments, and operate in compliance with the regulatory framework established by the Reserve Bank of India. This transformation allowed the IDBI Bank to play a more extensive role in India's banking and the financial sector. All right. So here, what we have seen the IDBI is a very essential banking for the industrial development, and why the industrial development is necessary, we had already discussed it in the previous lectures. So students, in this lecture, we have finished the IDBI. Okay. In the next lecture, we will start with the another important bank. Till then, just revise all the facts and figures we have discussed in this lecture and be ready for the another lecture. With this note, let's end this lecture and say thank you.